Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is 7 minutes till 9 a.m. Eastern Time on Friday, March 21st. It is OPEX, right? Quad Witch. So basically, that's the only thing really going on. We're going to have a Fed head, Williams speaking at 9:05, which is just in a few minutes here. And other than that, not a lot going on. Uh, scheduled news wise. So yesterday we had 475 to 485 basically was the range, rounding off a little bit. It was a little short of that for the Qs, and then basically 5625 to 5700, a little bit over that for the SPX, and basically 562 half to 570 for the SPY. Those were your ranges. We didn't have any poor structure uh, on left on the books yesterday. We could have, marked the excess and A on the Dow, but or the Russell, but it really wasn't significant. There's a little bit on each of the indexes, but as you can see back, we're just in this range that we've been in. And then, this is a continuous contract. To be honest with you, until after we get past March 31st, there's a big expiration today. There's a big expiration, the quarterly expiration on Monday, March 31st. I'd rather be looking at the specific contracts than the continuous contracts, but we need to know where the untested points of control are. So basically, from 56.70 half to 57.76, that's your range. It's about a 105 point range there for those untesteds. And then yesterday's point of control, 57.14, and that's just to stay in the same little area that we've been in. But if we go back and look at the specific March contract or the June contract, I'm sorry, that we're in now, and you can just forget about these lines. But basically, if you take look at the high from the Monday the 17th and the low from Thursday, March 13th, right? That is your range that we're stuck in until proven otherwise. Uh, and then we'll have to see, we do have, uh, possibly a little bit of an uptrend going on, but as things have it in the market, right, today would normally be when the local low or very near it would be for this cycle. Um, the only caveat we really have is, I mean, if you're someone who puts long-term money to work, uh, today is a day to dollar cost average in this afternoon. Uh, and that would be, if you put in 15 to 25% of your free cash will be just a day to buy the Qs and the SPY. And then we'll see, mark this as a level, and then we'll see how things progress between now and March 31st, and give some more advice. But this is potentially a spot to put longer term swing money in, stuff that you don't want back for at least 3 years, is what I'm telling you. And if that's not the kind of game you're playing, then you don't want to be swinging or doing anything else really. This is like a 3-year buy-in potential for today. And then as we look at the overnight session, right, 56.5 points for today. We are doing exactly what we're supposed to be doing, right? We're already under yesterday's lows. We're coming down, and those entries and levels that Jack's looking at, they could re-engage sometime next week or, between now and the 31st or after the 31st. But between now and let's just say April 1st, things could just be sloppy, and then we could get re-engagement after that point in time. No one's gonna tap you on the shoulder and say this is the starting gun, this is the low. That's just not the way it works. You just have to be, you know, this is an area to dip your toe into, and hopefully, the worse today is, to be honest with you, the more that we can drop today, the shittier close that we have, the more that this is likely to be the local low. Uh, Keep in mind, and I keep pointing this out on the cash market. 55.65, right? We closed at 56.62 on the cash yesterday. Almost 56.63 is where we closed on the cash yesterday. Uh, I'll bring this over here just so you guys can see it. Oh, joy. All right, let's look at the cash roll. I mean, I probably should bring this over every day when I'm talking to it because it might be hard for some of you to imagine what I'm actually, dissecting here or whatever. Uh, so you should have a line on your chart at 55.65, right? This we've only since we, that is a large. There's 40,000 long puts from a JPM collar. That's one of their equity products. It's not something that they do for themselves. It's something they do for clients. It's just a offering that they have. It's widely followed. It's huge. Um, so there's a position for 40,000 long puts here that they will not, they'll just let them expire. They'll either be in the money or out of the money or whatever. But anyways, for the market makers and the dealers, this is something they have to contend with. So this is a huge support resistance line. If we start falling under there between now and March 31st, that's when it expires at the close on March 31st, you can get acceleration to the downside. So it could be a magnet draw, but that's really the bogey line that you're looking for. Um, and we'll see, we could just kiss it again today and then, lift off of it next week, or we could, get around in it and we could start dropping under it between now and the 31st. But you really need to have this on your cash chart because we're so close to it. We're normally not anywhere near this around expiration for these, and I'm talking about the March 31st expiration. So we're within 100 points from it from yesterday's close. We are down in the overnight session, right? So, not sharply down, but down enough to make it, you know, that you need. We're down 47 points. Remember, we closed about 100 points off of it yesterday. So we only got about 50 points more to go to hit that. So I think I beat that up uh, quite a bit. So what I want to do is just, look at positioning real quick. So today, 5,600 is your marker. Again, we closed at 5,662. So we're about maybe 15, 20 points off of this level right now. Below there with a rising VIX, it can just, fall into the close. But above there, you're just kind of bouncing between 5,600 and 5,650. No big deal. And then sorry. And then looking at the SPY, there's really no SPY markers to speak of that are in play for the day. And there's really no Q markers that are in play for the day either that are, huge and you should be, watching it. If you can see down here, there are $5 markers down here for today. This is the one you should be looking at Friday, the 21st, right? This is today's expiration, and you can just see there are $5 markers. That's 205 points, basically 205, 210 points between each of these, right? You could just ping pong around them. You could ping pong between two, three, or four of these today, uh, or just get stuck between one set of them. Uh, that's just the way it is. So again, don't fight the tape, right? Watch the VIX today. Don't fight the tape, or just probably 60% of professional day traders do not trade today, right? So uh, don't think that you need to be a hero by trading today because you don't have to be. And then as you look down at this, the next levels is 56 46, 56.33 for the ES. And then there's really not anything until we get back to 19,201 for the NASDAQ. Not saying we're getting there, but it's on the table and just watch the VIX, watch what's going on. And remember, we could just be, down in the morning, up consolidation, uh, slow grind over lunch, and then just acceleration downwards into the close potentially today and close basically on or near the lows of the day. That would be the best for the bulls, right? If you're one of those people who wants to put long-term money to work today, you really want to see this market fall out of bed today. I hope this helps. You guys have a great day. We'll see what Jack's looking at, and I'll talk to you on Monday.